Hi there, welcome to Kneppy Invest. Very happy to provide you a video on one of my favorite companies on the ASX. That is Electro Systems, or EOS for short. In my opinion, the sky is the limit for this company. And I say that figuratively and literally because this company is dealing with space, communication, and defense technology where their products incorporate electro-optics applications, hence the name Electro-Optic Systems. So they are dealing with lasers, and who doesn't love lasers? Anyway, the space sector, and that's the main reason I am interested in electro-optic system, is a massive growth area, not only in Australia, but the world, and will be continuing to be a growth sector in the next few decades, potentially even longer than that. Actually, not potentially, probably even longer than that. Right now, the world spends about $300 billion in the space sector, and that's expected to grow to $1 trillion in the next 15 years. That's each and every year. Even in Australia, the space sector provides about $4.8 billion of revenue, and there's going to be tremendous growth in the Australian space sector over the next decade or so. In fact, it's expected to grow between about 7.5 and 10% per year. And not only that, the Australian government is encouraging companies to get into this sector. In fact, they've set up the Australian Space Agency in 2018. So I do expect tremendous growth and potential for growth in the next few years for this company and other companies in Australia that are moving into this sector. And I do actually own other companies apart from EOS that are moving into the space sector. Before we look at EOS's June quarter results, and we'll also look briefly at the March quarter to see how this company is progressing, just a few financial facts in regards to this company. The ticker code for EOS is, naturally enough, EOS. Could it be anything else? The market cap for Electro-Optic Systems is 611 million, so it's not cheap, and I wouldn't say it's expensive either. Receipts for the half year to 22 is 117 million, and I just got those numbers from their June quarter results. So they will release, EOS will release their half year results in August, and they were operational cash flow positive for the half year of $4.8 million. And the price to sales ratio, looking at the previous full year results, financial year results, 3.5 right now. If you do want further information on this company, they did release their Appendix 4C on the 23rd of July. I highly recommend reading that, reading any presentations they have released. But something I am promoting a little bit more and more right now is going to the company's website, because every single company's website that I have gone to is a trove of information. And that's where you do find the most relevant information on a company. Before we look at the June quarter results for EOS, I just want to go back in time to the March quarter to see how this company was doing for their first quarter of their financial year. So EOS, when they release their August results, that will be the half year results, and their full year results are released in February. So their financial year is the calendar year. So how did EOS do in their first quarter of their financial year? Receipts to customers, 51.4 million. So that's quite good. That's fairly high. But EOS do spend a lot of money on building up the inventory. Staff cost 11.6 million, administration cost 7 million, and even income taxes paid 4.7 million. So because they are spending a lot of money building up the inventory and that sort of thing, they did burn through $12.6 million in cash during the March quarter. And that meant, because they are spending a lot of money on investing and financing activities, that meant they began the quarter with $65.9 million, but finished the quarter with only 41.5 million. There's still a lot of money on hand, but because they are burning through a lot of cash, that was one concern for me, that potentially they would have to do another capital raising. Over the past few years, they have done quite a few capital raisings to build up their inventory. But typically, when a company builds up their inventory because of all the contracts they have to fulfill in the future, that should translate to a lot of cash coming into the company in the next few years. So I look forward to seeing how their receipts for customers grows over the next few years. So let's have a look at the June quarter and see if receipts have grown over the past 3 months. As we delve into EOS's June quarter results, we see that receipts and customers have increased over the past 3 months, going from 51 million to 65.6 million. Not only have receipts from customers grown, product manufacturing and operating costs have come down a little bit, and even though staff costs have increased from, I think it was 11 million to 13.9 million, instead of having to pay income taxes, EOS actually received income taxes over the past 3 months, and more than likely that's because they were running a loss in the previous financial year. That's the only thing I can think of. So if you add all those things together, EOS were operational cash flow positive by over $17 million for the June quarter. And because they weren't spending as much as that in their investing and financing activities, for instance, they spent $6.2 million on capital expenditure for the June quarter. That meant the cash on hand did grow over the past 3 months by about $6 million. Now, $65.5 million of receipts in one quarter tells you nothing in isolation. We need to know the receipts history for a company over time. And in this graph right here, I've shown you or provide you with the receipts history for EOS going back to the June quarter in 2013 when I started following this company and collecting their Appendix 4C data. Over the next 3 or 4 years from when I started following this company, receipts were flat, fairly bit of lumpiness there, but we didn't see any growth. We didn't see the growth in receipts until 2018. And receipts have been growing at a fairly quick rate since then. We did see a bit of a dip in receipts during the COVID-19 financial panic, going all the way down to $13.8 million in the September quarter of last year. And because we did see receipts dip like that, EOS had to do some significant capital raisings to fulfill the contracts they did sign. And because they had to do that capital raising to increase the inventory to satisfy the contracts in the future, that should have told us that receipts were going to explode over the next few quarters after that September quarter. And they have done exactly that in the last 3 quarters, growing from 13.8 million to 65.5 million. But the overwhelming story here, the thing you should take away from this graph is that cash receipts for EOS are absolutely exploding over the last 3 or 4 years. If you do calculate the compound quarterly growth rate in receipts from June quarter 2013, it is growing at 7% per quarter. And that's taking into account that receipts didn't grow for the first 3 or 4 years. So just looking at the growth rate in receipts over the past 3 years to focus on when receipts have been growing, we do get a number of 13%. And that's not on a low base. That's actually on a high base when receipts were at 10.7 million. So that's the sort of growth you do want to see in revenue or receipts per quarter. If you had that per year, a lot of investors would be happy, but this is per quarter, and that amounts to a growth rate in receipts or revenue at 50% per year. So just take that into account when you think of 13% per quarter as being low. That translates to 50% per year. Onto the charts for EOS. I'll show you 2 charts. First, the weekly chart going back to 2014. So just after I started following this company. And then in the next slide, we'll look at the daily chart. And back in 2014, share price was less than 50 cents. And we did see the share price going up at a pretty good rate. But even though I was following this company, I didn't see their cash receipts growing. So even though we did see the share price increasing, I wanted to get some confirmation that the financial state of this company was improving. And we did receive that confirmation towards the end of 2018 into the start of 2019. I took a position in EOS at around $2.50 in 2018 or so. And during 2019, as cash receipts of this company started to explode, we saw the share price explode with the cash receipts growing. In fact, the share price went from $2.50 to a top of $10.50 just prior to the COVID-19 financial panic. So at that point in time, in 2019, the market absolutely loved this company. But the market also knew that EOS would suffer during the COVID-19 financial panic. And that's why the share price fell from $10.50 to a low of $3. And unlike a lot of other companies on the ASX that did see their share price recover quite strongly, we haven't quite seen that with EOS quite yet. In fact, the share price right now is only about $1.15 to $1.20 higher than the lows during the COVID-19 financial panic. So I do think right now there is opportunity in EOS with their share price being suppressed over the past few years because of the COVID-19 financial panic and the effects of the panic or the pandemic that has had on EOS. But simply we've seen a massive rise in the cash receipts of this company. We're going to see significant cash come into this company. And I do think right now the market is missing the story with this company. And when we look at the daily chart with EOS, we can see the lack of acknowledgement about the growth in receipts with this company just by looking at the chart. There is negative sentiment when it comes to EOS. And then negative sentiment plays out with the story of the share price movement over the past 9 months, falling from around about $7 to a current share price of $4.15, even though we're seeing receipts really take off and the company being operational cash flow positive. At this point in time, if I wasn't a holder in this company, I would suggest just hold back and wait for this negative sentiment to shift to positive, and it will happen eventually, and we just don't know how far the share price will fall. It could fall even further than it is right now at $4.15. So that's what I would suggest to anyone who is not a shareholder of this company. Me being a shareholder, I'm going to hang on to my shares because this is a long-term buy and hold for me. But if I do see the share price fall even further than now, and if I do see the shift in sentiment, if I do get some signs of that, I will buy some more shares in this company. So I'm just going to wait until that time because with the negative sentiment, there's no reason to rush in and buy, even if you really love this company. When EOS released their Appendix 4C on the 23rd of July, the share price rose about 7 or 8% because the report was positive. The company was operational cash flow positive. However, there was still some negative sentiment in this company, and that negative sentiment can be seen when the company announced that Fred Budd had stepped down as the chair of EOS on the 27th of July. The share price fell 7% on this news. That's not the real sort of news you would expect a share price to fall 7% on. It's not that negative, but because there is still negative sentiment in EOS, that will drive the share price down. And then on the 2nd and 3rd of August, there was some more news flow in this company. And to be honest with you, this is not the sort of news flow that would expect a major rise in this share price. And that's exactly what we've seen. SpaceLink, which is a subsidiary of EOS, was selected to fly a demo on the International Space Station. Share price rose 1% on the 2nd of August. And then on the 3rd of August, the day I'm doing this video, there was an announcement that EOS and Nova Systems formed this Sovereign Missile Alliance to compete for the Commonwealth of Australia Sovereign Missile Enterprise Program. Now, they have not been awarded any contract. This is just the announcement that they are forming an alliance with another company. But the market has received this news with a little bit more enthusiasm than the International Space Station announcement the previous day. The share price is up 2.5%. As I speak right now. It could change through the rest of the day, and more than likely because there is negative sentiment and the share price has risen. There's going to be some people selling out to sell out of this dog stock. Yes, people do believe this is a dog stock simply because the share price is lower than when they bought in a few months ago. That's all about the psychology of investors. Investors want to see the share price of the company they bought into rise immediately from when they bought in. And if it falls, they automatically can consider that company a dog stock and they want to get out. That's the psychology of most of the investors in the market right now. As I go down the path of completing my mission on doing a video on every single company that achieves an operational cash flow positive June quarter, I'm really looking forward to covering the next 4 companies in a video because I do think quite highly on all 4 of these companies. And they are MSL Solutions, BetMakers, SciDev, which is another one of my favorite companies on the ASX, and Ansarada. Now, Ansarada is a company I don't know a lot about until I looked at their Appendix 4C, and as I delved a little more deeply in what they do, I'm a little bit excited about that company because their valuation is around $100 million, and for the very fact they are operational cash flow positive and growing, that looks like a fairly exciting company on the ASX right now. That is all I have for this June quarter Appendix 4C video for Electro Optic Systems. If you have any questions about this company or any other company on the ASX, or if you want to provide any information on this company, Electro Optic Systems, I'd love to hear your thoughts. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial situation. That's all for this video. Have a good day. Bye.